Namaste, good morning. Welcome to our 58th episode of AAA weekly webinar series. And this time, the subject is interplay between insolvency and bankruptcy law and IBC. So, Ankit, what is your opening remarks on this subject? Because see, we would be covering briefly all the budgets, amendments made in the budgets since 2018, and for facilitating the implementation of insolvency law, and also to avoid any kind of clash between IBC and income tax. So it was all going very well till this state tax officer versus Rainbow Paper Private Limited judgment came in June 2022 from Honorable Supreme Court. And now the NCLAT has also started passing orders based on Rainbow Paper Private Limited. So what is your opening remarks on this subject, Ankit? Because there are a lot of litigation going on still.
No, I think it's very, very important to understand the possible tax implication towards any government dues for any resolution applicant. And in case the resolution applicant does not see this coming, then it can be a big hit to the investment. I can't imagine a scenario where somebody has made a huge investment, invested money into into a CD, and then revived that CD, and after 1 year, after 2 years, he's asked to pay up some income tax because now he is making, or he has started making some money out of that asset. Because it's very, the values change from the time when the asset is in a condition where it is not operatable because of the pressures of various lenders and various demands, and then it can change later. So what has happened recently is that GST law has plugged a lot of loopholes, a lot of systems have been brought into place, that it now becomes very difficult for any company to default on GST unless on an ongoing basis, unless and until you have some old demands coming up, where somebody has done an assessment or GST does an assessment and there is a demand now. But with income tax, that is not the case. Income tax today, one can say that, okay, they have not filed returns for the past 2 years, 3 years because they did not have the tax to pay. That demand will be alive. There can be then assessment related demand that comes out. So these demands can be possible, and therefore those are one side of the story. The other side of the story is all the gain that is booked in the balance sheet when a resolution applicant takes over due to the creditor balance write-off or write-back. So let's understand the journey of how Finance Act or how Income Tax Act has coped up with the idea. And this, of course, Rainbow Paper is a problem. SIRP faced that problem, or rather banks face that problem, that government always, when government tried to come first, banks did not get any money out of the secured assets. Rainbow Paper is again something that needs a solution, and I think that was also envisaged or provided for in the discussion paper that IBB had released.
Yes, Ankit. So I think this is exactly the topic is today, that we will have the impact of Rainbow Paper. And very recently, in the case of Assam Company Limited, even ANCLAT has passed an order that is based on Rainbow Paper. And the resolution plan, which was approved in 2018, actually has been now rejected and sent back to the adjudicating authority to provide for the income tax dues. So these kind of problems, in fact, like this stress keeps coming back to the insolvency resolutions. So we will share our PPT, and just give me a minute so that we can directly go to this subject. So this is the Ankit. We actually have this is not really very new, but this is an old PPT that we have with us, and also we have updated to the latest judgments. And then we actually can see the right from, because see, rather than going into the preamble, going into that actually will be wasting time, because in the 1 hour we have to finish this subject, and it is a very long subject. So therefore, what we actually we can say that the tax authorities, income tax authorities can also initiate CIRP to recover their dues. However, in case the assessee has filed an appeal, the first scenario is that the income tax department can file an application under section 9. Even if it is a secured creditor or unsecured operational creditor, the application can only be filed in section 9. Secondly, the application can be filed only in case there is no appeal pending. So in case of appeal, then it will be considered as a disputed liability. So section 9 would not be applicable. So income tax department can recover their dues by filing section 9 application. In fact, when this IBBI asked me to go to various commissionerates and educate them or appraise them on the insolvency law vis-a-vis income tax law. At that time, I in fact quite emphatically I said that income tax department can use this law to recover their dues. So how far, see, like it has not seen the light of the day so far, but yes, I understand fully that the income tax department has too many demands which are not disputed, and they can actually go file an application under section 9, and either the demand will be paid or the company will go for insolvency. Then the rights of the tax authorities, as I've already said, because this is a corporational debt and it has to be done then coming to the moratorium. See, now what is moratorium under IBC vis-a-vis income tax law, income tax authorities? Now, when we see the section 14 as per the CIRP regulations and as per the IBC code, the moratorium means there is a moratorium on start of fresh proceedings is prohibited against the corporate debtor. Continuation of pending proceedings is prohibited against the corporate debtor. Execution of any judgment or order is prohibited under CIRP order. Any action to recover any dues is prohibited. Now, the only question which is very important here is what is the definition of proceedings? Is this is asking information from assessee is a proceeding? Assessment process, when a notice is given to the assessee and in the notice some information is asked based on the returns filed, is it a proceeding? Now, my understanding is that even the judicial pronouncements are also like this, that it is the duty of the resolution professional to cooperate with the income tax department. So that means the cooperate means, now let us see two scenarios. One, that because of the section 14, the RP does not attend to the income tax proceedings like assessment notices or reassessment notices. Then in that case, the income tax department will proceed ex parte and there will be huge demand against the corporate debtor. Now later on it is found that there are some liquidation value which is due to operational creditors also. In that case, it will be a loss to the corporate debtor. And secondly, in case the RP is not cooperating with the income tax department, huge demand is created, and later on there is a proposal for quashing, or there is an incidence of quashing, or there is a proposal for withdrawal under section 12A. Then the company go back to the managing director and the company goes back to the old management. So in that case, any demand created during CIRP because of the non-cooperation of the RP, that actually will be detrimental to corporate debtor. Therefore, it is the duty of the RP to attend to the notices of the income tax department. It is the duty of the RP to fight for the unreasonable demands raised against the corporate debtor. Third, it is the duty of the RP to provide information during the assessment proceedings to income tax department. However, the moratorium is applicable on recovery. Moratorium is applicable on once the, let's see, I haven't seen a judgment, the income tax department is filing an appeal against the demand after the claim is admitted. Like there was some relief given to the assessee. Then the income tax department was trying to file an appeal before the Honorable Supreme Court. Then the court said, when your claim is admitted as per the judgment of High Court, then why are you going to Supreme Court? That's not allowed, because that is what is called proceedings. However, the recovery process is a proceeding. Attachment process is a proceeding. Filing an appeal after even the claim is admitted by the RP is a proceeding. So this kind of clarity I wanted to bring, that what is proceeding, what is restricted and what is not restricted. Now coming to the liquidation process, there is a slight difference in the liquidation process. That is, in the case of CIRP, it is only start of fresh proceedings is prohibited, whereas in the case of liquidation, start of fresh proceedings is prohibited only. And in the case of the liquidation, the continuation of pending proceedings is not prohibited. Continuation of pending proceedings are not prohibited. Everything else is the same. In case of liquidation, the proceedings can continue, whereas in the case of CIRP, the existing proceedings also would be stayed. Now coming to the implementation, we have seen a couple of judgments recently. It was basically a judgment in the case of Shamkin Multifab Limited, and it was the judgment of Delhi Income Tax Appellate Tribunal. It was held that where an application is filed under Section 7 of the IBC, and it has been admitted, the moratorium under Section 14 of the IBC has been declared. Hence, an appeal filed by the Income Tax Department against the SSC. Hence, an appeal filed by the Income Tax Department against the SSC could not be allowed to be continued. Could not be allowed to be continued. I think this is very important. This is what I was discussing. These are the proceedings, and assessment by the tax officer is not a proceeding. So once, because that particular assessment is a process where the demand is created. Appeal is a process where the demand is being fought. So now once the demand is created, claim is filed, the matter is over. Then it will be distributed as per Section 53. That's very clear. Similarly, in Delhi Income Tax Appellate Tribunal, they relied on a ruling of Honorable Supreme Court in the case of Alchemist Asset Reconstruction Company versus Hotel Godaman, wherein the Honorable Supreme Court held that even arbitration proceedings cannot be initiated after imposition of moratorium under Section 14. So this was the moratorium, and then there are some more kind of judgments that we have seen. So in the case of Deputy Commissioner of Income Tax versus Bhuvan Madan, RP of Diamond Power Infrastructure Limited. So in this case, it was basically a case where Section 238, everything was inserted. But in this case, it was also made clear that the Income Tax Department cannot file case against the corporate debtor without prior permission of this adjudicating authority. And this very second line in the adjudicating authority order, it was that it is also made clear that problems should not be there during assessment work for the resolution professional in completing the CIRP in time. On the other hand, the resolution professional is directed to extend its full cooperation to the Income Tax Department in their assessment of tax of the corporate debtor. So number one, the assessment work should not be a hindrance to the resolution process. Number two, it is the duty of the RP to extend full cooperation to the Income Tax Department while they are assessing the tax payable by the corporate debtor. So these are the two things which are on moratorium. Now, Ankit, anything that you can discuss about the moratorium under the IBC and income tax?
No, I think with respect to moratorium under IBC, your thought process that assessments are important and it's the duty of the RP to give information is important. But then sometimes the information is not available. That excluded, there is no limitation or no problem in addressing issues. In one of the cases that recently came into light, a case with AAA insolvency, we found that the liquidation proceeds and the whole priority of payment under the waterfall mechanism will change in case there is a in case the demand of income tax is upheld and it is not fought off in an appeal process. So as we always have understood that those litigations that might have some advantage with respect to increasing the value of the company of the CD in the CIRP process or the liquidation process, those should be continued without any difficulty. And the other side of it is that the procedural part should be continued to avoid any new demands as far as possible. And yes, as you said, the ITT has given a judgment where the moratorium continues and the moratorium also enables the appeals to be put under a moratorium. However, I'm not sure if the processes that are involved in assessment process, as you said, we do have an opinion that those will continue. Those will not be affected by moratorium.
Going forward, Ankit, now we also can see some of the provisions of the IBC like 17(2)(d), where the RP has the power to access the books of account and other relevant documents of the company, corporate data, which is available with the auditors and accountants and also statutory authorities. Now, the RP can also write to the income tax department that whatever information that you have regarding this corporate data, we need it. And that is what is required for the purpose of assessing the understanding the assets and liabilities of the company. So that's what is section 17 subsection 2 clause D. Then again, like the RP has the power to take control and custody of all assets which are owned by the corporate debtor, even if the assets are under attachment by the income tax department, because the control and custody is the first right. Then after taking the control and custody, then comes is the claims from the creditors. So in case there is any kind of property which is attached by the income tax department, it is the duty of the RP to take control and custody. However, there will be resistance. Therefore, the RP will be required to go to NCLT for seeking some relief against the income tax department who is not releasing the charge or lien on the property or attachment on the property. So this is the kind of rights. Now, other powers of the RP or the liquidator, the similar powers are available with the liquidator also. So that's what I've said. In case any of the accounts, any of the properties, any shares are attached by the income tax department, the liquidator will first write to the department. In case they don't agree, then they would actually, the liquidator or the RP will submit an application to NCLT where the issue would be decided. And we also have filed many applications where the assets are attached by the income tax department or any other department, and therefore we file an application to get it released from the, or the lien is removed or the attachment is removed. That kind of application we keep filing to the NCLT. So, however, the during CIRP, the RP is fully loaded and RP is under obligation to comply with all the laws of the land. So therefore, it is the duty of the RP to prepare books of account, take cognizance of TDS provisions, TCS provisions, prepare balance sheets and or get it audited and get the tax audit done, file income tax return during CIRP, and if there is a tax, that tax has to be paid. That particular tax which is filed during during CIRP, that is something which is payable. Any income earned during CIRP, income tax is payable. No claim can be received for a particular period after the commencement of CIRP. So all claims has to be taken as on the date of CIRP. And once the claim is filed, that means all the attachments are removed. But somehow the departments are not removing it till the time the file goes through the circles. Otherwise, it doesn't get complied with. Yes, Ankit, can you just start with some part of it?
Yeah, I will just put up a
We
question
have some
that
definitions of operational creditor, operational debt,
so I
regulations.
have so I have a question from Hemanji. He says, what about inquiry received from some other party and asking details from CD and where the CD does not have enough manpower? So what do we do with those queries? So maybe you can answer quickly, although income tax department, when they ask any question, it is normally with respect to books of account, seeking any information from the CD. So what if
No,
that
it is on
information?
the, Ankit, it is on the best effort basis. It is on bona fide efforts from the RP to provide that information to any government department in case he has it. He cannot say that because of the moratorium, I'm not authorized to share the information with you, because sharing information and proceeding against the company, these are two different issues.
Yeah. Then of course we have filing of, like, as you, I think with respect to this slide that is here, the tax authorities can file their claim as an operational creditor, and there again, the idea that they can be a secured creditor, that is a rainbow paper judgment interpretation in case there is an attachment in place, or because of the provision in the law that the debt or the dues to an authority will be treated as a security over the assets of the company. So based on that, that was the logic behind rainbow paper. But I still think that's temporary because of the proposed amendment in the law, where it kind of changes and clarifies on that definition.
So, like, there's nothing, no need to spend time on this. Like this, section 520 talks about the operational creditor, and then 521 talks about the operational debt. It has been already held. It has already been held by the government department, income tax due specifically today. They are operational creditor, and the every see, like, the claim can also be filed by the operational creditor in Form B. So the income tax demand, the all the RPs can get income tax demand, and that too in Form B as an operational creditor, and the claim will be accordingly provided. So once the claim is provided, then I think the income tax department will actually should sit quietly rather than starting the proceedings on all angles.
Right.
Okay, so operational creditor issue is done. Government authorities will also file their claim during liquidation process, and verification will be done by the RP or the liquidator. That's a very, very normal process of verification. Now, the statutory dues, then we talk. So when we talk about statutory dues, what all judgments are there where these income tax dues have been again held as operational creditor. The first is the Principal Director General of Income Tax versus Synergy Dure Automatic Limited, where it has been held that the income tax department and the sales tax department are entitled to due arising of the existing law or operational creditor. Similarly, the Kiran Global Chem Limited NCLAT judgment held that the tax department would fall under the category of operational creditor. Now, Andhra Pradesh High Court, I think now we can call it Telangana, because it has this particular part has been shifted to Telangana, in the Leo Edibles and Fats Limited. So in this case, the tax department triggered controversy by insisting on having priority over the collection of past tax dues from companies. Going through a resolution mechanism under the IBC, held that the department cannot claim any such priority. So at times, Ankit, it seems that actually, like, there are a lot of people, they are misusing it. There are instances where the company is going into liquidation because there is a huge demand from the uh, PMLA or from the ED office. So
Yeah, so when they go into liquidation, primarily because of the perceived non-compliance with the clause that you're paying at least that much amount to the dissenting financial creditor or dissenting secured creditor. Uh, so I think that's where the problem comes in. Anyways, that's a problem that has to be addressed sooner than later. So maybe we can have a few questions. So
Yes.
Madanji is asking, when there is no money in the CD account and COC is not contributing to CIRP cost, then what is the scenario? What steps should RP take? RP should try and conduct COC meetings virtually. Not that does not involve too much cost. Keep seeking COC's directions with respect to, or COC's mandate to give approval to the financial expense of the CIRP. And I think after a while he has to go to NCLT and then say that the COC is either not attending the meetings or there is no there is no approval on expenses. I don't see any other way out. What is your opinion? I think that's about.
I think the nowadays, like since we all are insolvency professionals and our career is all depend upon the cooperation of the COC in the existing cases, and also in case they are convinced with you, then they will give you the future cases. So in a way that every resolution professional should not have a confronting views unless the RP is fully supported by the law. One, that in case the COC is not contributing, filing an application to NCLT has not resulted very positively, then the COC also kind of takes a stand that going to NCLT only in case we have delayed the payment, that is something that we should not tolerate, and that is something that we should keep with ourselves. So that is maybe the reason that the person who is asking this question is saying that the COC is not paying any contribution, but it is the responsibility of the RP to continue the work like this, to provide information to the department, and also to provide information to the advocate who is fighting for the income tax cases. So my understanding is that on best effort basis, it can be done. On best effort basis.
So
in the
then,
case of, yes.
Another question is that if any assessment is made by IT department, fresh demand is raised for the period prior to CIRP period, what should be the status of demand, as no fresh demand can be raised during moratorium? That's Harish T's
So
question.
fresh demand can be raised, fresh claims can also be filed, but there cannot be any recovery process. There cannot be any attachment of bank account, there cannot be any attachment of assets of the company. But in the process of collecting information and making an assessment of tax and then filing an claim by the income tax department, nobody can stop this. This is 100% valid action.
So then Mr. Choksi is asking, the income tax on profit earned during the CIRP period is payable. If the CIRP period is stated from, say, 1st January 2022, then the income tax for the entire FY 21-22 would be payable?
So there are two things, Ankit, that I have seen today. In case there is any income during CIRP period, income tax return has to be filed. And there are many cases where the tax has already been deducted by the payer. So that will be a credit available. And second thing that we have checked today, that even the minimum alternate tax is not applicable during CIRP. Once the application is admitted to the adjudicating authority, then the tax dues, the past tax losses, past depreciation, that will be allowed from the day the application under section 7, 9 or 10 is admitted. So what I'm saying is that there is no minimum alternate tax during this CIRP. So you have to file the return, and with you, if there is an income, then all the brought forward losses are available to you to set it off. This is the answer to this question.
Okay. So then basically, with respect to the return will be filed, you're saying, and the taxes due for that year will be required to be paid, or
yes,
the taxes due only for that last quarter will be required to be paid.
but the taxes due means based on a financial statement, based on the audited balance sheet, based on the tax audit. So what I'm trying to say, in case there is any income, then there are some expenditure also. Even the CIRP cost is an expenditure for the company. And
So you're
then
saying likeliness of a profit is very less, but in case there is a
likeliness of the
profit.
profit is very less. And secondly, even if there is a profit, that will be set of 100% with the past losses, because section 115JB is not applicable to this kind of scenario where the company has gone into insolvency.
Okay. Is the income tax department within its rights to issue a show cause notice during CIRP or liquidation when the moratorium is still in effect? Is an RP or liquidator bound to respond?
As I said, it is important because the income tax of RP is supposed to uh, comply with all the requirements of the law. RP is supposed to comply with the requirements of income tax law, GST law, TDS law, service tax law, even the RERA. RP is supposed to comply with. Now, in case the RP is restricted by a reasonable cause of not doing something, that also he has to present in the court or in the before the authority, statutory authority, that these are the reasons that I am not able to provide you this information. So this is my understanding about this, because see, the assessment has to continue, the notice has to be obeyed, all the compliances are required to be done by the RP. So the company has to be kept complete in compliances all the manner. So these are the reasons that I'm saying that RP has to cooperate, RP has to provide information, and that's not covered under section 14 of the IPC.
So another question that has come in is that if the income tax department files Form B, files its claim, and in the charge column it doesn't say anything, so we can easily treat the income tax department as an unsecured creditor while adopting or while accepting the claims, or should we read it with the rainbow paper judgment and kind of do something about it?
So the RP is a judicial person. It's a person of public servant. It's a person who actually has been appointed by NCLT. So therefore, for RP, what is the question again? Last one.
The idea is that if the claim form filed by income tax department during CIRP process does not have the mention of security interest.
So till now, there was no such difficulty. So all the RPs were admitting them as operational creditor. And accordingly, in case there is any allocation to operational creditor, that used to be given. But now, in the case of Rainbow, it is almost a kind of, NCLAT has also held that in case of any income tax demand, the lien should be considered as automatic. The lien should be considered as automatic, and it is really not important that the recovery proceedings have been started. It is also not really important that the assets have been attached. Rather, in case the assets are attached, we all are going to the income tax department to get those assets released in favor of the RP or the liquidator. So this is any other question?
Yeah, I think we can move on. We can move on with the presentation.
So in this Principal Commissioner of Income Tax versus Monet Ispat and Energy Limited, it was held that in moratorium period under IBC will apply to order of the Income Tax Appellate Tribunal. The court, the Supreme Court made it clear that income tax dues being in the nature of crown debt do not take precedence even over secured creditors who are private persons. Again, coming to the Electrosteel Steel Limited versus State Bank of India, and it was a judgment from Jharkhand High Court that it was held that the resolution plan cannot be said to be binding on the Commercial Tax Department of Jharkhand as they did not participate into the resolution process. Now, this was a dispute that somebody said that we never participated into the process and we did not file our claim, and therefore the resolution plan should not be accepted, it should be rejected. That has not happened. But this is what is the judgment says, that just by not participating in the resolution plan doesn't mean that you will not get the waiver, as everyone is getting the waiver. That is the judgment of Electro Steel Limited. Now, Ankit, a couple of judgments in case you can read, like the Sales Tax Department, Ultratech, Nath Dwara, these are all very, very briefly written text.
So, with respect to this Ultratech Nathwara cement, so we're talking about how the demand notices were quashed and any other demands which they may contemplate for the period prior to the resolution plan being finalized. The demand notices were ex facie illegal, arbitrary, and per se, and cannot be sustained. So here again, the idea was that after the resolution plan is approved, the Rajasthan High Court said that you can't just keep opening Hydra heads and kind of keep raising demands with respect to prior period. They are addressed the way they were supposed to be addressed in the resolution plan. With respect to Sales Tax Department, State of Maharashtra versus New Fultan Sugar Works Limited. Here again, the appellant is an operational creditor. Provisions of Maharashtra VAT Act creating first charge on its favor get eclipsed under the overriding effect of provision of IBC. I think this is again a judgment which is pre-rainbow paper. So like I
Yes.
think yeah, so this might have been like now
Mm.
we can say that the Supreme Court judgment overrides this one.
Yeah, yeah.
Treatment of tax dues and resolution plan. So here again, when we say resolution plan, we have to, at many times, we have to structure the whole resolution plan and see what will be the tax demand out of the entire system. Many of us do get these leads where people say that you have companies in which there are huge carried forward losses. So let us have those companies which have huge carried forward losses, and we will be able to use those companies for the purpose of setting off our demand or our other tax liability. And we have observed that in most of the time when you make a statement and kind of try and understand that what will happen on taking the company, so taking over the company by the resolution applicant, we at times or rather several times we find that there is little carried forward losses left after making adjustments on account of the various creditor liabilities that are written back and the assets that are written down. So with all that in place, it becomes an important to say that that carried forward loss is not really available in that process. So each resolution plan must provide for payment of debt of operational creditors, which will not be less than the liquidation value which is available to them. So in most cases, we don't have any liquidation value which is left for the operational creditors, but still there is a small amount that is normally provided for so that there is a settlement that can happen with respect to the debt which is already available and on record and where the claims have been filed. Rights of tax authorities during liquidation process. So government authorities have been given one seat on the stakeholders consultation
No,
committee,
that's
and
not right now.
so this
Nowadays,
is
after the amendment in section 31, subsection 31 capital A, sorry, in regulation 31 capital A of the liquidation process regulations, now in the liquidation process, the tax departments are having rights equivalent to the total debt of the company and proportionate to the total debt of the company. So they have all that right in the liquidation process. So this was the earlier system of stakeholders consultation committee. Now Ankit, let me take up this the pending assessments during CIRP and in the resolution plan. So this is very clear that the RP is supposed to handle the assessment proceedings. RP should provide information to the tax authorities. RP should reply to all their notices. This is this is what is the mandate from the even otherwise also. I have seen IBBI saying that the RP will comply with all the laws. Even I'm also handling a case where the RERA given some directions and the RP is supposed to provide the information to RERA That is what is the opinion of RP. However, in case of state, that can be different, but the RP's obligations during assessment proceedings, even during liquidation, it is getting the assessment done, replying to section 148 notices, 147 notices. There are judgments which are conflicting judgments. I will just come to on those judgments when even resolution plan is approved, and after that some section 148 or section 147 notices are given by the tax department. So the high courts have given varied opinion on this. We'll touch base with that. So this is again pending assessment kind of a thing, income tax provision. So we have to talk about some of the provisions relating to tax liability, like the Supreme Court in Pioneer Urban Land and Infrastructure versus Union of India, and also the Committee of Creditors of SR Steel. It is very well held that the department is unsecured creditor and they are operational creditor. In SR Steel, the Supreme Court says once a resolution plan is approved by the Committee of Creditor, it shall be binding on all the stakeholders, including grantors, and is to ensure that the successful resolution applicant starts running the business of the corporator on a fresh slate, as it were. So it was basically a scenario where no fresh claims should come, no fresh, like Hydra had popping up every day on the resolution. A successful resolution applicant is not warranted. It is not something that is acceptable by the law. And it is section 31 says that the resolution plan approved by the Committee of Creditors and NCLT shall be binding on all the stakeholders, including Income Tax Department and other statutory authorities. Therefore, post-approval of resolution plan, the Income Tax Department shall not have any right to invoke a tax liability versus the tax corporate debtor. Now coming to some of the provisions of the income tax law, section 178 of the Income Tax Act, which provides that the liquidator to notify to the assessing officer about the commencement of liquidation. Now, I have seen that this particular section is applicable. This particular section is applicable to all those winding up proceedings under the High Court, under the Companies Act. There is an exception that these provisions are not applicable if the company is under IBC. In this provision, the income tax officer is liable to notify the amount of tax, and the liquidator to take prior approval from the income tax department before sale of the asset, but this is not applicable to the companies under insolvency. So there are some amendments in section 178, section 79 also. So I will actually come back to it slightly later. But yes, this is not applicable. However, I still feel that for a voluntary liquidation case, the income tax department has to be notified by way of a claim, by way of a public notice given in the newspaper. The income tax department will file their claim, and once those claims are filed and those claims are paid as per section 53, for a voluntary liquidation, all claims are supposed to be paid in case these are crystallized. So this is what I'm trying to say, that in liquidation, section 178 is also still applicable, but the IBBI has issued a circular. IBBI has issued a circular on 15th of November 21, where it says, and the circular number is 45, dated 15th of November 21, where the IBBI says that one, that the voluntary liquidator has issued a public notice. Two, the department must have filed the claim. And three, then the RP should not take NOC from the income tax department. Because of this NOC, the liquidations are not getting concluded. So this circular, in fact, helped a lot in the voluntary liquidation assignments. Then section 46 of the Income Tax Act says, where the assets of a company is distributed on its liquidation, such distribution shall not be regarded as a transfer by the company for the purposes of section 45. The shareholder who has received the any money or any asset, that will be taxed in the hands of that particular shareholder. So these provisions are applicable to most of the companies undergoing under voluntary liquidation also. So this provision is applicable. Section 46 is applicable under the for all those persons who are getting some kind of distribution under voluntary liquidation processes. Now, this section 288 of the Income Tax Act, this amendment came in Budget 2020 with effect from 1/4/2020. Authority would be provided to RP and the liquidator to appear before the income tax authorities as authorized representative. This was a practical difficulty which has been resolved by various budget provisions. So this was one of the provisions that now the income tax department can consider RP or the liquidator as authorized representative. Then section 140, which provides for verification of return of income, now it can be authorized by the RP or the liquidator as may be prescribed, because in the voluntary liquidation process, all income tax returns are supposed to be filed, and those returns will be filed by the liquidator. And this is a provision which came in Budget 2020, and it is effective from 1st of April 2020. Earlier, the government did not envisage the liquidator filing a return, and then otherwise also the liquidation process, the return of income is not required to be filed. In voluntary liquidation, the returns of income are required to be filed. So therefore, this is applicable to voluntary liquidation cases, because the otherwise liquidation process, which is not voluntary, in that case, the income tax returns are not required to be filed by the liquidator. So this section 9B, in fact, is not applicable here, because today we are discussing, but this was only for other than corporate entities like partnership firms and the PPTs. So this is not applicable. And
so one addition to what we were talking about earlier, that in the liquidation process, the normal return is not there. Rather, there's a receipt and payment return that is required to be filed. That is how the income tax form is designed. Just wanted to add that to that conversation.
So that is something where the that receipt and payment is there nowadays, that based on that receipt and payment, some return is required to be filed now.
Yeah, that was always the case with the companies under liquidation, that the receipt and payment was required to be filed. The normal return was not required to be filed for a company which is under liquidation.
But Ankit, is that applicable to a liquidation process under IBC?
I think so, because now that the definition has also been changed, that the liquidator becomes the authorized person to file this return. So the intent seems to be the idea that the return should be filed.
I think you're right, Ankit, because there are many companies that are suffering because there's a lot of taxation, which is the tax TDS is getting deducted, and the companies are not able to get those TDS refund. So for claiming TDS refund, there is a special format of income tax return which is based on the receipt and payment. So that what is that format, Ankit? In case you can just a little bit of dwelling on that, is what's possible.
Yeah, I can just dig that out. Just give me 5 minutes. I will just dig out the form and show it to everyone.
Okay, so in the meantime, we are just trying to go ahead with this part. This 9B and 45B is not applicable to companies, whereas in the case of this section 48 also, we've discussed 178, we've discussed 140, 238 provides the right to the liquidator claim refund under the Income Tax Act. Section 238, subsection 2, provides a right to liquidator to claim refund under the Income Tax Act. Section 46 provides for the capital gain tax on distribution that we've discussed. On sale of secured assets, the sale receipts are paid to secured creditors, and tax, if any, on the sale of assets would be payable as a claim of the operational creditor. This is what is held in the Pooja Bari case. Capital gain on sale of assets during liquidation process. As I said, that there are judicial pronouncements that the capital gain on sale of the assets during liquidation process would be considered as an operational debt. And if there is any capital gain that would be considered as an operational debt. And if there is any amount which is due to operational creditor, then the capital gain tax would be payable. Then the capital gain tax would be payable. See, when we saw this regulation 15 of the IBBI, and it was in regulation 15, it provides that the liquidator is required to maintain and get the auditing done for receipt and payment account of the liquidator. Preparation and auditing of financial statements are not required. And this was also a judgment in NCLAT, which I in fact argued at length, and we got a positive order that no TDS can be deducted, no return of income can be filed by the liquidator, and no balance sheets are supposed to be made, and no tax audit is supposed to be done. So this was also the case laws that we have seen. So in the case of, like I was discussing this capital gain, Pooja Bari versus G Ispat Private Limited, NCLT, New Delhi Bench, Income Tax Department claimed the capital gain from the to be deposited first as per the Income Tax Act. It was held by the NCLT that the liquidated assets are those released by the secured creditor under the code, and secured creditor is not paying any capital gain tax in case assets are sold under Surface C. It was held that the tax liability arising out of the sale of assets shall be distributed in accordance with the provisions of Section 53. So it was again the same case. The tax on capital gain tax on sale of asset is an operational debt. It will be distributed, the proceeds will be distributed as per Section 53. If operational creditors are getting some dues, the tax department also will get its dues on capital gain tax. So, anything, Ankit, could you locate, or any question there?
Yeah, a lot of questions, and I could locate. So let me just quickly share my screen. So this is the basically the ITR form. And in case I want to search the liquidation, so first of all, in the filing status, it asks you whether the assessee company is under liquidation. So it asks you whether you can say yes or no. So once you say yes, then the form dynamically changes and allows you to fill up this part of the form, which is called OL, Part A OL, which says receipt and payment account of company under liquidation. So you talk about the opening balance of cash in hand and bank, and then you talk about what have you received, what have you paid, and what is the closing balance, and that's the return that you file.
Okay.
And then going forward, this is what is this form. So that's the income tax form, or that is the liquidation part that I'm talking about. So in case you read here,
can you make a case that all the liquidators are supposed to file, or it is only applicable to companies under voluntary liquidation?
I believe all companies need to file it. This is my understanding, because in case you look at the provisions of the Income Tax Act, we can read that again. But in my opinion, it is always written as if the IBC provisions of IBC will override income tax wherever the provisions are different from the Income Tax Act. We can read that again. I don't think there's a full stay on implementation of Section 179 if a company is under IBC. So we can read that provision again.
In the receipt and payment account, how the income would be calculated? Just go to that sheet again.
Income will not be calculated. This is only a disclosure mechanism. This is my understanding, that it is talking about interest, dividend, sale of assets, where it is asking us to specify the nature and amount, and then realization of dues or debtors, and then others. So then you can specify whether they're revenue or capital in nature and their amount.
Payments means like secured loan, unsecured, creditor, commission. So whether the expenditures will be allowed or not, that has to be seen. I think this is interesting that the Income Tax Department is requiring all the liquidators to file income tax returns. and the form is devised in such a manner that based on the receipt and payment, the income tax return can be filed. So this any TDS in case deducted can also be claimed by the liquidator as a refund.
Yes, I believe so, but I believe that we will have to kind of, there will be different combinations here. But then I think the idea is that yes, the ITR form provides for it.
Yeah, ITR forms provide, and that to receipt and payment basis.
Yeah, and this is not post IBC. This part has been there since a long time. Even for the official liquidator, it has been there.
Look, since when it was there, like this form right from the beginning, or it's a latest insertion?
No, it's been there since before IBC also, because this was also meant for the official liquidator.
So it is, but then there is a section, which section authorizes the. So anyway, this is the today is the income tax. Well, this is something that we actually have to search a little more. So that we come to know clearly whether the liquidator is supposed to file their income tax return or not. Although the NCLAT says that the liquidators are not supposed to file the income tax returns, and if this particular the format is latest, then we can check and we can come back. So we are not touching GST today, but then we definitely would restrict ourselves to TDS provisions are applicable, TCS provisions are applicable. What this the section 179 of the Income Tax Act, where the liabilities of the directors of the private limited company in liquidation, then it says that in case the companies are not able to pay its tax dues, then the directors of private companies would be responsible for the payment. However, there is something which is in case the director fails to prove that non-recovery of tax dues is not because of his gross neglect, misfeasance, or breach of duty. So this is very important, because in case there are tax dues, and then in case there are section 66 applications against the directors, then the income tax department can proceed against the can proceed against those individuals for payment of tax dues. So what I understand is that this is the section 179 and coupled with the section 66, because of the fraudulent activities of the promoters, the tax liability would be payable by the directors in case it is not paid by the company. Similar provisions are also there in section 167C, where the liability of the partners of limited liability partnership is also given. Again, section 170, where the returns of income are supposed to be filed, and the returns of fringe benefit by the employees are supposed to be filed. The RP can sign this return of corporate debtor under CIRP. There is no provision in the Act for filing of the returns during liquidation. However, in the next year, now the CBDT has actually said that the liquidators also can, or the board can authorize any person to file a return. The liquidator also can file the return. Section 41, subsection 1 of the Income Tax Act, which is called remission and cessation of liabilities. This is something which is a very, very hot issue nowadays, that any resolution plan is approved, and after the approval of the resolution plan or after the sale of the company as a going concern, in case there are liabilities which are not payable, which are ceased to pay only because of section 53, because the liquidation value was lower and the amount of the asset is lower, and the total claims are higher, and final total liabilities remains unpaid. So all those liabilities are not payable. Those liabilities cease to be a liability for the company. So according to section 41, anything which is already taxed or has been claimed as loss, or has been claimed as an expenditure, or has been claimed as a trading liability in the past. Finally, in case that liability is not payable or cease to exist, then that amount is taxable and it will be routed through the profit and loss account. So in case we purchase any material from a particular party, and finally that party becomes an operational creditor, and the total purchases or the total expenditure is incurred through that party is claimed from the income tax department, but the amount of the liability is not payable as per section 53, then the total that particular party, when the liability ceases to exist, will become income of the company. So this is what is section 41. And also section 28 subsection 4, which has been amended in the last budget, means budget 2023, where it has been said that any kind of benefit to any person while the person is conducting the profession or business, that would be taxable, whether convertible into money or not, that would be taxable. So in this amendment, it seems that the income tax department has an intent of taxing all kinds of term loan which are ceased, which are waived because of the lower liquidation value. So the impact of this Mahindra and Mahindra judgment, it seems to be have been taken away by the income tax department with this amendment. However, when I look into a very, very critical analysis of the section before and section after, I don't see any impact, and I don't see any change in section 41. Had the intent been to tax those waivers, then the amendment would have been in section 41 and not in section 28, because there is a special section for remission and cessation, and that section is not changed. However, section 28 subsection 4, which is a residual section, was changed. So Ankit, we all that, in fact, there are a lot many judgments that we have, but then the question is that the time is up. And I only want to say that very, very recently, in case we see there are very, very recent judgments, which is the reopening of judgments, that is also it was resisted by Bombay High Court that the judgments cannot be reopened. This is again considered to be Hydra head popping up every day. That is something which is not accepted. So, in fact, one possibility is that we actually discuss in detail and we convert it into two parts, Ankit. What do you suggest? Because there are a lot of other things that we can discuss in this part, because a lot of other judgments also. We have to discuss 115 JB, section 79. So I think we can conclude that we can take one or two questions, and then we can actually say that this will be a second part, because we have a lot of material, a lot of new judgments. So should we conclude that we'll be having second part?
Yes, I think very much. That's completely feasible for this topic. And basically...
But then we will add one more thing. We will also add GST into this. So the next part 2 of this particular subject, we will come out with the latest judicial pronouncements on GST, on income tax, including rainbow paper, including the latest judgment in the case of Assam company, where the NCLAT has held that the resolution plan, which was approved in 2018, needs to be set aside, and it was actually remanded back to the Committee of Creditors to provide for the tax dues, considering the tax dues as a secured operational creditor. So these kind of judgments are coming, and we will also look into the other latest judgments on income tax and on GST. So part 2 will be a lot of intense discussions on the present position of the income tax, obligations of the RPs, obligations of the stakeholders, how to deal with the GST and the income tax liabilities in the present scenario. Yes, Ankit.
Right. So I believe that basically I'm just looking at some questions. So there are some comments with respect to the IT return, that some people have filed their IT returns and claimed refund of TDS deposited for cases under liquidation. And There is a question that in liquidation as a going concern, can loss of the company under erstwhile management be claimed by the new company post takeover? I don't see
Yes.
any limitation there. Yes, I
Section
think that should
79
be
has
the,
been amended.
that's something that should be okay. And then we have if we consider PF department claims as operational creditors, if so, is it mandated to file their claim under Form B? If not filed in Form B, what action needs to be taken by RP? So I think we've discussed PF as a separate matter. Which say that the PF dues uh, have to be taken up on priority. I think there are many other questions, but since we are having a part 2, we can take up the remaining questions next time.
Thank you very much, because the time is essence for everything, and we didn't waste time. In fact, the contents were a little more than what we expected. Especially, we would like to cover GST now. So we look forward to see you all next Saturday, 11 a.m. as part 2 of income tax dues and GST dues. Thank you. Thank you very much for being with us.
Thank you, everyone. All right.